Well, Tom Lee just struck fear in the hearts of bulls all across the US, all across the world. He said that you have to be careful these next 8 weeks. I want to play the clip for you, show you what he said. And the reason this is so important is he is one of the biggest bulls in the market, continuously saying that he wants to be long, even when there were recession fears for the last couple of years, and it's paid out really well. He's been bullish on Nvidia, Tesla, Bitcoin. A lot of these doing quite well. He even called back before the halving for Bitcoin to hit maybe 100,000 or 150,000 very soon. So now he's saying that you have to be cautious. Now, is he just coming up with something now that the market's down? Is he just speaking to the fear, or does he have a good point? I'll talk about that, but I'll let you make your decision ahead of time too. If you don't mind, hit subscribe. We're close to 300,000. It will help us get there. I really appreciate it. A little bit arbitrary, but it is a cool milestone. Also, there's a link underneath the video to Margex where you can long the market if you think we're going to go up. If you think this is just a blip on the radar, you can go long, or if you think we're going to head down further, you can short the market as well. So definitely check out this link underneath the video. They're doing a big Caspa airdrop where you can get up to $5,000 for free just for trading on the platform. Now, let's get into the clip and then I'll give you my thoughts on it.
Joining us now with this call for the markets on the first trading day of September is Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. Market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production. Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realized the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds, no, this is a strong market.
How far down? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's been testing investors' patience. But I think we should expect turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always?
I think
or is there going to be and by the way, buy the dip at when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we do.
And are you waiting for that?
Yeah, I think it, you know what, we'll find out this jobs report, because like if it's too strong and investors worry and so the stock market's down Friday, I would be buying that dip, but there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I think I would just say at the bottom line is it's a strong market, so I don't think we've seen the top for 2024. It's just
Now, before we talk about that clip, a couple reasons we are down today. The market is reacting negatively this morning to extremely poor ISM manufacturing data. Demand fell, inventories rose, and prices rose due to labor and shipping costs. This is the definition of stagflation, the Fed's worst nightmare. This also has people thinking maybe the Fed won't raise rates or lower rates. Maybe they will keep rates the same for a little bit longer or be a little bit less aggressive in taking rates down. Peter Schiff, everyone's favorite Twitter poster, this morning has seen a trifecta of weak economic data. PMI and ISM manufacturing data both came out even weaker than expected, while July construction spending unexpectedly fell. It's becoming clear the economy is entering a recession just as inflation is poised to turn higher. Now, personally, I think he's speaking to his book a little bit. He loves talking about gold. I think this is a blip on the radar. Now, I could always be wrong, but in a market where we inevitably go up 90% of the time, I think it's better to be poised long or positioned long. I always think it's smart to have some cash on the sideline, but if you go back and watch the Tom Lee clip, he said that we could have some dips over the next 2 months, but he thinks they're basically there for buying. He thinks we're going to end the year higher. He does not think we've hit an all-time high. And with the Fed lowering rates, I think he makes a really good point. Of course, we have to continue to watch the data. I think Tom Lee's welcome to change his opinion, right? He can say that there is some fear on the horizon, or there's some weakness on the horizon. Sometimes we do that here as well, right? If there's some big overhang. When Ethereum, for example, was going to get their ETF, we said, hey, Ethereum could get massive amounts of inflows, but what's more likely is we're going to see some large Ethereum outflows from ETH, for example. So that's not FUD. That's just a fact or a possible future outcome. And that's exactly what happened. So we could get some weaker economic data. I will say, though, the markets seem to change very quickly. A couple weeks ago, everyone was super excited, or maybe it was last week even, that the inflation numbers came in lower than expected. Now this week, we got some weak manufacturing data and the markets are back down. It can happen just in a day or two where everyone changes. So I would make sure that you are still positioned in this market, but as always, it makes sense to have some cash on the sidelines, because if you do get a good buying in opportunity, that's awesome. And it can help you keep a level head. Now, if you want to trade this market, like I said, there's a link underneath the video to Margex where you can long and short the market. I am still positioned very long. All right, I'm very long this market. I'm very invested in this market. But of course, I always have some cash on the sidelines. Let me know how you're positioned underneath the video. Just to be clear, this is not a FUD video or anything like that. Just giving you some of the data and an explanation for why the market's down today. But give me your thoughts on it. Thank you so much. I appreciate it. I'll see y'all in the next video. Bye.